Hello everyone, I hope everyone is doing well today and had a great holiday and a great past 2 days, start of the week. Apologize for not making any videos recently. I've just been kind of tied up with a few other things. I know it's not really trying to make more videos. I just kind of got tied up with some other things, but I've still been trading and whatnot. Anyways, we have had some really interesting price action over the past, really a couple of weeks. As you can see on the daily chart, we have had, I guess the simplest way to put it is from here to here. If you read Al's blog on his Brooks trading course website, you heard him talk about probabilities of, excuse me one moment, arguably, okay, sorry about that. So what he's been saying is, really since over the weekend, we're about 40 points from the all-time high. I know we're not right now, obviously. We're actually 10 points from the all-time high. However, 30 points ago, somewhere over here, we're about 40. And Al was talking, the probability of us reaching a new all-time high. In other words, if you short here, put a stop up here, what's the odds you get down here? Well, over the weekend, it was roughly 50-50. Maybe now it's a 40% bet. Think about that. You sell here, risk 10 points to get all the way down to here. Probabilities. The math is very good on that trade. Low probability, but very good. The kicker is, and the reason why it's not such an easy trade is it could take 7 months to play out. Now, I apologize tremendously. The all-time high, I don't know why I do not have this marked. Hopefully someone would have corrected me. Okay, that makes more sense. Okay, so let me start over. Sell here, stop up here, target down here. The all-time high is this pink line, ATH, all-time high. That is the stop. Here's your target. So, somewhere between 50-40%. The math's good. Clearly you have a chance to make, you're risking 40-30 points. Actually, I'm sorry, you're risking maybe 20 points, maybe probably less than that, and going for a target of 180 points. It's really good math. Now, I honestly know the exact numbers. I hadn't looked. Doesn't really matter. Point being, it may take 7 months to play out. So, he summarized basically why would a trader take the other side of risking theoretically from here to here, betting on price going to here. Well, traders are fading breakouts, and they're fading them because they know that most breakouts fail, and the trade could take 7 months to occur. And would you rather take a bunch of intraday trades or one trade of 1 month? Nobody wants to put all their money in one basket and sit on their hands for 7 months when they could fade every breakout and just net a bunch of profit and then lose once. But all the other trades would quickly offset that. So, enough of that. Let's get back to today, really. Now, and I'll review the other days in a second. I've been looking a lot at climaxes. I've really started reading Al's book recently. I've read, I think most of the chapters. What's helped me the most is his webinar. That's helped me clearly the most in my opinion. But I feel I have a good grasp about terminology, at least. And it's really interesting when you go back and just read basic chapters, such as what is a climax? You know, climax is simply anything unsustainable. So ask yourself, is this sustainable? Clearly not. Better yet, is this unsustainable? Notice this bar. This bar is twice the size of any bear bar so far. Look at this. That's the 1 minute chart. Does this bar, you know, price reverses at a trend channel line or failed trend channel line breakout? That whole thing clearly won. Look at this bar. Unsustainable. That bar alone, and the fact that it's this big at the low of the day, makes every trader in the world not want to sell. And here's why. Any trader that sold here made like 6 points in less than 5 minutes. Really good. You know. Second, if you read Al's chapter over climaxes, I believe it's the reversal book. It's book 3. You know, somewhere, you know, where the major trend reversals, wedges, and all that are, or wedge reversals. Anyways, what he says is when you get this is a climax, up and then big down, big up. Anything that's unsustainable, you know, here. This is unsustainable. So what's going to happen? Well, two things. Well, two sets of things. Number one is there's no such thing as a V top. There's no such thing as a V bottom. And that is an easy thing to forget. So it doesn't matter how you want to draw this. We have a bull trend. Gap up, spike up, doesn't matter. Spike, trend. Trend line break. Well, yeah, we reversed the entire move, so to speak. However, there's always a test. So think about this for a minute. You know, it's kind of like a major trend reversal. This is a lower high major trend reversal. There's only, if you really think about it, there's only 3 things that can happen after a major trend reversal. So let's say we have a bull trend, let's just say this, and a trend line break here. There's 3 outcomes. Outcome 1, we break out strong into the upside and break far above here and get some sort of gap and more up. Unlikely. Outcome number 2, we test up to here, test this close, and just drift sideways. We kind of did that. Outcome number 3, we test up, form a lower high, never reach it, just sell off. And it's really simple when you put it in that perspective. There's only 3 outcomes. So, second, what is a climax? A climax, yes, it's unsustainable. More importantly, it's a pullback. It's a test of the determination, in this case, test of the determination of the bears, and maybe it's a test of the determination and the bulls in this case and resiliency of the bears. Doesn't matter. It's all fancy words. Whole point is big climax. It's a pullback. The bears are going to hope that we barely pull back for a few bars, 5-10 bars, and then sell off more. The bulls hope price reverses. Big up, big down. We're drifting sideways. The market is deciding on a bull channel, which we ultimately got, or a bear channel. It's that simple. When you get a big up, big down, it's a simple fight. You know, this up here and down here, very important. Here and then right here. Go back to what I just said about everything is tested, and that's because of scaling bulls. The reason there's no such thing as a V top or a V bottom is because everybody wants to see that test which 3 outcomes will happen. Strong breakout, a failed test of the extreme, in this case a lower high, or trading range, which we got overall. Remember, most major trend reversals or reversals lead to trading ranges, which it ultimately led to. Second, here's a daily chart. Better yet, here's a weekly chart. We're trying to break out of all of this. Climax bar, big up, big down. It's a climax. So, this whole day, first off, rocketed up, rocketed down. The last thing in the world the Bears wanted to see was this. Because this, at this moment, right here to here, there might be a 60% chance that we've seen the high today. However, after all this, it's not 60, maybe 50-50. So this gave the Bulls a chance. Arguably, bull trend line break, higher low. Here's the thing to think about. Why did no bull want to buy up here after a strong breakout of this? Why did no bear want to sell down here after a strong break of this? Well, they know because of one reason. They know anything worthwhile will have a test. So let me give you a better illustration for the bulls. Let's just call this a bear channel. Bear channel, bull flag. Strong breakout of a bear channel. Excuse me. I'm a little under the weather today. Strong breakout of a bear channel. Well, the bulls know the bears are not just going to give up. They're going, the bulls have to have some sort of double bottom to satisfy a test down. And they got that. And then we rallied up. So, take this. Bull trend line break. The bulls need some sort of test up before they're just going to quickly give up. Ultimately, some bulls did. Some bulls bought here, they bought more down here, and they said, oh crap, I might have just bought the worst price possible. And they gave up. Other bulls said, gee, this is strong enough. I'm going to look to, if I scale in, maybe I'll hold for a test up to here. The bears who sold down here, they said, oh no, I may have just sold the low of the day. I'm going to scale in, try to get out break even. So, look what happened. Sell this high, sell on the stop, takes you to here. Sell this low, sell the stop, takes you down to here. That's no coincidence. So, this double top, we had a test up, turn back down, another test up, turn back down. The bears wanted to break out to the downside. Couldn't get it. We had a test up. Arguably the bears will sell, scale in down here, try to get out break even. Test back up, they'll do the same thing, trying to get out break even. Notice this. Touch this close. Bears could not get out. So, real quick, I just want to go into one thing. This whole sideways nature was simply a fight. Fight got between the bulls and the bears to see who's going to win, who's going to get the channel up. That's all it was. Ultimately, sorry about that. Ultimately, sorry about that. Ultimately, the bulls won. Point being, you get a climax, you get a pullback. So, see if I can find something here. Here, sell climax, biggest bar of the mood. You might get a little more down, but it's just too climactic. The bars are not strong, and it's getting stronger down. So, one thing I'd encourage you to do is really read up, and if you have house books, read the simple chapters. The chapters where Al has a lot of words and no pictures, for instance, a channel. If you go to his trend book on channels, he's got like 25 pages of just paragraphs. Those are the most important chapters. You know, there's a lot of conceptual stuff in the little things. You know, understand the difference between, you know, why does a double bottom work? Well, you know, what's so special about it, or a double top? It's a test. It's a test of the, you know, in this case, this double top is a test of the bulls. Another test of the bulls to see if, you know, what they would do. This test down, it's to test to see, are the bulls going to buy or sell? You know, look what here. It's no coincidence price paused right here. Hesitated. But, you know, notice what's so special about this move up. Well, the character of the market changed. Number one, we had a double top. We tested down, tested down. You know, you can make the argument. Let me start over. Leg one, pull back, leg two. Arguably a low two, double top, fair flag, emini, always in the short market. You can make that argument. We've stayed above the high of the day, double top. You know, we might get a measure move down. Probably not going to happen, but we might. However, here, leg one, we got the pullback, leg two, and we got another pullback. Now we may be in a channel. More importantly, we are in a breakout mode situation, double top and double bottom. Ultimately, we broke to the upside. However, look at this. Ever since this bar, two bull bars, one bear bar, one bear bar, one bear bar, bull bars, one bear bar, two bear bars, no bear bars. We formed a small pullback bull trend at the close of the day. And you have to notice the market's getting tight and lack of selling pressure. So, real quick, back to what I was talking about. You know, I really want to focus on climax, just for a little bit right now. Here's a climax, climax, climax. Here's another climax. You know, look at every one of these bars. Notice. A lot of measure moves, I know. I'll just do it this way. Obviously, that's climax bar, test at the top. Test is up here, climax bar. We ultimately got it, but we had to get above here first. Climax bar, we broke above it. Let's check this out. Climax bar, here's the top. Trends get weaker, not stronger over time. So, when you see this trend, not very strong, whoa, really big bar. You have to ask yourself, is this a measuring gap and the start of the trend, or exhaustion? Well, what do you think? Probably exhaustion. So, let's see if I can find some. Let's see. Well, so let's look at this. This is kind of interesting. Okay, fair trend. V bottom. But I thought V bottoms had to be tested. Well, how do you not know the V bottom is already tested? First push down, second push third. It's a wedge. What is a wedge? A wedge is a channel that is parabolic. It's increasingly stronger. Sell off. So sell off, stronger, stronger. It's climactic. It's unsustainable because, let's look at it like this. It doesn't quite matter, but you know, obviously this channel is weak. I'm sorry, it's not weak. I'm trying to think about how I'm trying to describe this here. There's 3 pushes: spike, strong breakout, pull back, you know, move up, second leg down. 3 pushes. Now, I don't really want to. All I'm going to say is a wedge bottom. Think of it as a bull flag, even though there's no bull trend prior. The odds are to break out to the upside, and look what happened. Tested the top of the wedge up here, arguably down here. Besides the point. The point is, a wedge is climactic and unsustainable. So really, when you think about it, arguably you had a bear trend line break, spike down, trend line break, spike down. There were multiple tests down and tests ups, so it wasn't exactly a V bottom. However, very climactic. Buying pressure, sell off, buying pressure, strong sell off. Look at these bars. You know, this is what's interesting. Here, yeah, we got a measurement down. Climactic bars, but you know, it's you know, what's the difference between this and this? Well, a couple things. Here, you know, it's interesting when you put everything into perspective. Well, bear trend. Trend line break, pull back, trend line break, pull back, you know. Another trend line break. Strong breakout. You know, arguably just a test up to here, you know, top of the range. However, if it's a really strong trend line, you know, this is an example as to why traders will not always buy a breakout. They want to wait for the pullback, you know, for example. Breakout. It's interesting, if traders would have waited for the pullback, they'd had a decent high too, you know, 6, 7, 8, 9 bars later. And it would have been well, you know. By the way, this is that example where strong bulls buy, stop down here, here, and they add on here and get out break even here. Smart traders, they don't buy, you know, it doesn't really matter. Smart traders recognized this and added on or got long here, scalped out up here. Kind of a brief opportunity if you're aware of it. Anyways, back here. Trend line break, however, here, let's just say 60% chance we'll get a measure move up. Well, not 60%, maybe 50%, 55%, 40%. It starts going down. Remember, a climactic behavior, this is climactic. The longer it goes sideways, the less and less the bulls are interested. They start to give up. They start to get worried. Swing bulls are not going to hold through all of this. Eventually, they're going to give up, such as here. Adequately tested. You know, this told traders a lot. This is a lot of information. Told traders that a lot of traders were scared. They were willing to buy pullbacks, but scared to hold. Buy pullbacks, scared to hold. So by the time they got over, you know, here, we've had like, this is 20 bars since here, and we've made no progress. You know, it's kind of the thing. Nobody, what's your goal? You know, your traders don't want to put money on the line when the risk reward, not only when the trader's equation is bad, but there's a time variable. You know, if you really think about it, Al's right. There's 3 variables. There's risk, reward, and probability. Absolutely. There's almost a 4th variable though, and that's time. You know, it's kind of like think about it as the time value of money. Trader buys here and holds. Well, it's the same thing with selling here, stop up here, and targeting down here. Well, if I allocate enough money towards that, that is money that I cannot allocate or use in other trades or investments. So there's, opportunity cost. And that's a variable with traders. Even though this is only 20 bars, less than 2 hours, that's money that could be spending on other markets. So there's that other factor here, and this is what everybody was waiting for. Brief sell-off. Bulls, scaling bulls, finally can't take it. They're giving up. But the thing is, this is a warning to traders. Traders know that, well, some traders, they are not going to be point being, they may give up. Traders will sell, bears will short for a limited amount of time. You have to ask yourself, bear channel, we're breaking below a bear channel. It may last for a little bit, but it's probably it's climactic, so it's probably going to not last for very long, which it didn't. And of course, traders who bought the new low made money. So this is not really surprising that this happened. So take this example. Arguably stronger trend, net per second leg down. Bull bodies were testing yesterday's low, can't really seem to get up there. Bar 1 good, bar 2 good, bar 3, not really that great. So 2 trend bars, 4 sideways bars, possible trading range. Not very big, range is small. We may test down, make a new low of the day. The bulls probably need a double bottom. Strong enough. This is a spike down. Bears want to sell 50%, which is, arguably somewhere in here, depending on how you draw it. So we tested down. However, channeling down, strong breakout, unsustainable. We might get a second leg down. So, not really that great. And this is always one of those interesting things. Low one short, climactic, probably going to fail. Traders who short below this are betting on a strong trend. When they see this, they're getting out. So I think you have to get out here. If you don't get out here, you got to get out here. 3 bear bars, 4 bear bars, or 3 bull bars, 4 bull bars. Bulls are giving up. No trader's going to sell here. And trend. So it's really all I've got to say. A lot of it is just remember there's no such thing as a V bottom. There's always a test. When you get a big up, big down, a sideways is a fight. It's a fight for a channel. It's a fight for a trend. This was a simple fight. It was a test to see were the bulls going to exit if price tested up and sell off. Were the bears going to exit and buy back shorts and reverse the market, or were they going to sell more? So I hope this helps. Hope everyone has a great evening and a great